Welcome back to the 25th Annual Society of Automotive Analysts Automotive Outlook Conference. In this segment, we're going to be showing you remarks from panelists in the Industry Overview and Economist panel.
Thank you. Okay, good afternoon. It's great to be here. Exciting time, and I want to thank SAA, and I also want to particularly call out to the SAA board, Anthony Pratt. Thanks for your leadership. It's great to have this kind of forum, and there's just so much to talk about in terms of the auto industry. So there's never a dull moment in terms of what's happening. So I want to talk to you a little bit about what we see in terms of the global outlook, and then focus a little bit on the U.S. fundamentals, because I think there's some shifting chairs on the deck that are really important for us to look at, and then close a little bit with some of the key implications for long-term growth. So just as a snapshot, you see on this slide our short-term outlook for 2013, and just bear in mind the statistics always include medium and heavy-duty trucks. Those are really important segments for us. So globally, we do expect sales to be about 80 to 85 million units, closer to the mid to high range, it looks like at this point. And in the U.S., we've got growth pegged between 2 and 2.5%, with sales between 15 and 16 million units. That would be a great outturn after 3 years of double-digit sales growth here in the U.S. Now, in Europe, of course, likely to continue on a very weak trend. And for the 19 markets that we track, we project sales in the 13 to 14 million unit range, and that would be flat to down from 14 million units last year. In China, we do project sales between 19.5 to 21.5 million units in 13. The latest data really are starting to show some momentum, so we feel pretty good about that outlook. And that would be the strongest unit sales demand, not growth rate, but unit demand since 2009 and 10. And then you can see long-term, we still project growth in terms of economic activity between 3 to 4% over the next 5 years or so, with sales growth roughly in that 5% range. Now that's assuming trend growth, not pinpointing whether or not we're going to have a business cycle downturn in any given market in a year between now and that 5-year endpoint. So you can see, in general, we do expect weak Europe, but it is contrasted with growth in the U.S. and emerging markets. Now, speaking of growth, let's look at the growth track for global industry volume. So again, this includes medium and heavy-duty truck sales for the last decade. And just to point out, in the early part, from 2003 to 2007, growth averaged about 4.5% per year for that period. And the reason I want to point that out to you is because that was a period before we even got the constellation of over 50 countries globally that have reached the takeoff stage where their ownership rates of vehicles start to go up, i.e. they've got a lot of first-time vehicle buyers. These households are reaching middle income. They're able to afford a vehicle. And that's the point where we in the auto industry see an acceleration in automotive sales. And so even in the period before we even hit this massive it's almost a third of global driving age population today in that takeoff stage. Even in that early part of the last decade, the industry achieved an average annual growth rate of 4.5%. Now you can see the impact of the financial crisis, with sales dropping from the peak of 72 million in 2007 down to 65 million units. That is a heck of a downturn globally. And the fact that the financial crisis synced up the global economic cycle is just incredible. And hopefully we won't be able to have to experience something like that again. But that is a very unusual phenomenon where you have so much in terms of the financial sector squeeze and the credit squeeze, where we lost ability to finance working capital and other types of business and consumer activity. But even with that, look at the rebound. We're already, in 2010, we were already above the prior peak. So it was very temporary in a lot of markets where they didn't have the depth of repair that was necessary in their banking systems. And now we estimate last year sales came in at about 81 million. And again, with the growth, you can see coming up to 80 to 85 million units. And I want to point out, just as a case study, for those 19 European markets that we track, you see that bottom green squeeze. In 2007, those markets were selling 18 million units. And last year we came in roughly 14 million. So there's been a significant compression of ability to buy in those markets, and many different speed limits. So I just want to mention a couple. So if you look at Portugal, Ireland, Greece is a special example, but also Spain and Italy, their sales have fallen between 40 and 80% since 2007. And in fact, in some of these countries like Italy, we haven't seen sales at this level really in our proprietary database. We go back several decades, and we really haven't experienced this sort of compressed economic activity. Now, that other bar is large, and look how fast it's growing, and that's the area of the world that's really expanding, and it isn't just China and India. In fact, if you look at this left panel, you can see globally driving age population is moving up almost 800 million new drivers between 2011 and 2022. We'll end up with 5.9 billion people of driving age at 2022. So we have sizable growth in the population. But it's not just the population growing, it's the fact that the incomes are gaining momentum. And I point out on the right panel just a select group of countries, and what you see in that data are the vehicles in operation per 1,000 driving age population in each of those countries. So look at India at 32, and Indonesia at 59, Thailand at 200. Not noted here is Brazil at 227, and Mexico even at 395. Of course, comparing to the mature markets below the line, where essentially we have reached that point of optimal vehicle ownership rates. And in the US, we estimate that we're running at about 97.5%. So over this intervening period in the next 5 years, we expect those ownership rates to grow, and that will help fuel the growth in the overall industry. In fact, in 2011, we had already seen the baton pass from the contribution of volume growth from mature markets to emerging markets. So those emerging markets now are over 50% of global sales, and they'll continue to grow. In terms of the growth over the last decade, take a look at these two pie charts. On the left, you'll see 2002. And what I've done here is parse out according to region of the world, Asia Pacific and Africa, Americas, and Europe. And you can see in 2002, sales were about 58 million units, and Asia Pacific and Africa represented 1 out of every 5 vehicles sold. That's just a decade ago. Now fast forward to last year, with sales totaling about 81 million, and 41% of that is in Asia Pacific and Africa. Now, in the Americas, the share of sales in the Americas has fallen. You can see from 37% in 2002 down to just under 30% last year. But look at Europe, down 10 percentage points, from 40 to 30%. Of course, I mentioned the different speed limits in Europe. Think about Russia and Turkey, which are both growing very rapidly and will continue to grow over the next 5 years. Now, it's not all small vehicles, but certainly that is a very important entry vehicle for new first-time buyers in emerging markets. And look at the change here. In 2002, small vehicles represented about 48%, almost 1 out of every 2 vehicles sold. Now it's 1 out of every 3. And that likely will continue to grow as we see this takeoff stage materialize in the next 10 years. Of course, large vehicles are really important. And let's just kind of look for a minute at some of the fundamentals in the U.S. where large, particularly pickup trucks, are important.